the daughter, who was 3 years old, had walked out with some keys, dropped the keys. The dog attacked, got her on the neck, and she went out screaming. One of the other tenants from one of the other units came over with a gun and had to kill the dog.
Oh my God.
So, I've got a question.
Okay, we've got answers.
Well, no, I was going to say, don't worry about the pop quiz nature of it, because I also have the answer.
Oh, okay. Oh, great. Okay, then I'll sit back and relax.
So, good. Please take a seat. I've got some water right here.
Thank you.
Would you like some tea?
Okay, thank you.
How do you lose $1 million in a split second? How do you lose $1 million in a split second?
Vegas.
Well, that too. What I was thinking of was more is that, so we're coming to everybody from San Diego, where if you know anything about San Diego, besides that there's beaches and that it's palm trees in Southern California, the houses are crazy expensive.
Yes.
And if you have lived in a house for more than 5 or 10 years, chances are that house is worth $1 million. And how you might lose it in an instant, in a second, a split second, is if you don't have proper insurance. So I'm going to tell you a little story, right? So imagine you've had a house for 12 years. You redid the house. It's beautiful. You've got some money in this house. And you buy this brand new car. And of course, it's a brand new car. It's expensive, so you have to finance it. And so the lender who holds the note on that says, hey, this is great, but you need to have full coverage. All right, to me, that's an awesome term, right? Full coverage.
Yeah, I don't know what that means.
So, just wait and see. You're going to get full coverage, right? So you have full coverage. Here, do you want me to fix that?
I feel like it fell a little bit. I'm really sorry, but it's like, is this really low to you?
Yeah, it fell.
Was it
fine?
Okay.
The entire way.
Thank you.
That was in your lap.
Yeah, right? Okay, thank you, Chad. See? All right, okay.
About
Sorry about that, guys. Carry on.
All right, so
Okay.
now, my queen, are you set?
Yes.
So here we are. You've got this full coverage. Awesome. And you're just driving this brand new car. You're driving. You had it for a couple of years. You still owe something on it. You're driving down the road. You're not really paying attention. This is negligence. It just happens, and bam, you rear end somebody. Right?
Oh no, I hit him.
Yeah, you hit him. And so you call your neighbor who's an attorney. Say, oh yeah, what do I do here? But I've got full coverage. But then that attorney looks at it and realizes you don't have full coverage. The car has full coverage. So if it's damaged, you have $25,000 of protection, and that's it. But in addition to the $25,000, you got a house that's worth over $1 million. And so where is the gap there? Now, practically,
Wait, what does my house have to do with my car accident?
Well, so it's because you caused fault, or you injured somebody.
Oh,
right?
okay.
And so really, likely they're going to accept the $25,000 that your insurance is going to immediately tender because it was a bad crash.
Mm-hmm.
But you could have somebody that says, hey, I got $2, $3, $4 million worth of damages.
Oh.
Your 25 isn't near what I should expect. But you've got this house that's worth.
They're coming for my house?
They could come for your house. They could come from your house. And so that little pop quiz is how you can lose $1 million in a split second.
Ooh.
And that leads us into what we're talking about today. This is Unseen Impact. I'm Rory Pendergast, my beautiful co-host, Kerrie. Unseen Impact is the podcast where we look at the different ways in which personal injury can affect people's lives and families. And we try to kind of pull the curtains behind certain aspects to hopefully give the listeners, the viewers, kind of some tools in case something happens or to protect them. Today, I'm very excited because we are talking...
Drum roll, please.
Drum roll. We are talking about how you don't lose $1 million in that split second. And with us today, we have Chad Colston of Colston Insurance. He is an insurance broker. Chad, thank you for coming.
Thanks, Chad.
Oh, you're welcome. Glad to be here.
So what I'd like to do is start just a little bit tell us about kind of what it is that you do and about your brokerage.
Wait, are you from San Diego?
Born and raised. Been here my entire life.
You, I feel like sometimes when I meet like natives, I'm like, get out of town.
Born and raised my entire life. Up until the time I got remarried a few years ago, I'd almost never lived like like east of the 5 or 805.
Oh, wow.
Pacific Beach, Claremont, my entire life.
Oh, you're a townie.
Uh-huh. And I
right,
live in La
okay.
Mesa now, but
Okay.
that's about as far east as I've ever lived in my entire life. So
Wow.
it wasn't out there till I had AC for the first time.
Oh,
Yeah, but you didn't need it.
No.
oh, that's so funny.
So,
Yeah.
but tell us about
Okay.
you're an insurance broker.
Well, I've been doing insurance since I got out of state.
San Diego State?
San Diego State.
Hey, go Aztecs. Woo, woo.
Aztecs. I graduated in '97,
Just the other day.
and I got into insurance, and it was what made sense. I've been doing it ever since. I own 2 agencies. I have an agency in La Mesa. I have another agency in Ramona. We work with really anything that could be insured, whether it's personal insurance, cars, homes, motorcycles, toys like RVs, razors,
Side-by-sides.
side-by-sides, commercial insurance, and that could be a small one-person contractor who's a plumber. It could be a massive HOA with 500 units.
Wow.
It could be just about anything. And then obviously other types of insurance like health, life, Medicare, those types of things.
Oh,
But
wow.
most of my business is focused on property and casualty,
Yeah.
insuring inanimate objects that have value and, as you mentioned, can be a big source of headache potentially from a liability standpoint to
Yeah.
people.
Yeah.
Well, do you insure anything like random? Like
Ooh.
llamas or I don't know.
Someone's hands.
No, I don't do anything like that. Though
Like
we do,
spam.
though we do have a few farm policies,
Oh, okay.
and you got things like tractors on there.
Yeah.
Oh, okay.
Livestock could be
Like,
covered.
okay, so llamas.
But you bring up something like animals, dogs.
People
Oh, yeah.
insure their dogs.
Oh, if
Yeah.
you own a dog,
Oh, yeah. Okay. Tell us about it, though. That sounds
Yeah.
interesting. Okay.
well, there's 2 things on that. So if
Wait, are you saying like a specific policy for the dog, or just
you,
that's
you could,
covered?
you could be,
Okay.
you could be.
Oh wow.
So with homeowners insurance,
Yeah.
and let's assume you're the homeowner, because then you got a whole other issue if someone's a property owner.
Mm.
Correct.
Okay, whole other issue. But say if you are a homeowner and you have a pet, you want to make sure that you've let your agent or insurance company know that you have a dog.
Chad, I
Yeah.
have a dog, so I'm not
You're
sure if
officially
that,
on notice.
that count as notice, but she's very sweet.
Uh-huh.
She's all over Instagram, so it's all cool.
Okay.
But
That is so funny.
So yeah, you want to make sure they know because, for example, I have one gentleman who's had 2 dog claims. He lives in San Diego area, and each of these claims are probably over $100,000.
yeah, I bet
Oh.
they're bad.
Yeah.
Dog bites are bad.
One was to like a Japanese tourist who was here.
Oh.
They flew into San Diego, literally flew into San Diego. We're here for 2 days. It was a small little dog bite, maybe a few stitches, but they sued saying, you ruined my only vacation I've taken in my entire life. I came here. I have emotional distress. I have this.
Oh.
I can't use my finger now just right.
Oh.
It settled for $100,000.
Well, one thing I can say,
Wow.
because I've handled a number of dog bite cases, and especially the smaller ones with the hands, because, everybody uses their hands. And so what happens, especially in kind of the meat between the thumb and the forefinger, you get into that. And if you kind of lose the ability for using your hands, for some people, it can be really substantial. So that's dangerous stuff.
How much time do we have?
Oh, we got as
We
much
have
time.
time.
as
Because
you
I do have a little bit longer story about
Oh,
dog.
okay. Yeah. Okay.
Now,
Yeah.
it's not it's not necessarily a PG version,
Okay. Yeah. We'll take
but
it.
maybe PG-13.
Okay.
Well, we can.
Well,
bleep
our
stuff.
listeners have
Okay.
they're on notice.
So now, in full disclosure, this wasn't my claim, but this was from an agent that I know extremely well.
Okay.
Mhm.
He was insuring a property owner, and the property owner called them in the middle of the night frantically.
Yeah.
One of their tenants has had a dog and it bit a child.
Oh,
Long
no.
story short, a woman was being domestically abused by her spouse.
Mm.
She moved herself out of that situation into this other home with her and her daughter to get away from the abusive spouse. Okay, bad situation.
Mhm.
This was up in, I believe, in like LA area.
Mm.
And the individual had a pit bull
Mhm.
In the new house that she
in
moved
the new
into.
house she moved into.
Okay. Yep.
Now, come to find out, he'd never told the landlord that he had a pit bull. His lease forbid him from having a pit bull.
Oh, right.
But the daughter, who was 3 years old, had walked out with some keys, dropped the keys. The dog attacked, got her on the neck, and she went out screaming. One of the other tenants from one of the other units came over with a gun and had to kill the dog
Oh my
to
God.
get the dog off.
Because they let those pit bulls
they
latch on, and you
that's
can't get
right.
them off.
Oh my God.
Throat was gone.
Oh,
Oh my God.
So then the abusive spouse is suing the mom,
oh, this is the worst story.
the other tenant, and the property owner
Mm-hmm.
for loss of the child.
Yeah.
Oh my.
Millions of dollars. I mean, they're going after
Yeah.
millions of dollars.
Oh.
Now, there was some insurance in place to kind of take care of this. Luckily, when it went to court, the jury found, you know what? The mom, who was put in this situation by
Yeah.
the abusive spouse,
Right.
she is not liable for this.
Yeah.
Right.
It's not her fault. She was trying to get herself in a better situation.
Terrible is
Right.
that?
Oh
Right?
my goodness.
It's not the landlord's fault because the landlord had a lease.
Yeah.
And this is something I always talk about with people who own property.
Yeah.
Like, hey, if you're a landlord, I'm not a lawyer,
Yeah.
but this is stuff you should probably talk about to an attorney about how you design your leases. But they in the lease very specifically don't have a dog. You're not allowed to have a dog.
Mm-hmm.
He wasn't even allowed to sublet.
Yeah.
He sublet.
Oh.
He had a dog. So the judgment was against,
That
the
tenant.
tenant. But again, who had the big pockets?
Yeah. It was
The
the
big
Right.
pockets is the property owner.
Oh.
So yeah, they were trying to sue them for about $4 or $5 million.
yeah.
Wow.
Right.
Oh,
And-
that's
Oh,
sad.
what a story.
and-
My
and
God.
you're right. You talk about how to lose something in
Oh.
a moment,
That's it. How do you lose it in a moment?
and
God.
they didn't do a thing.
Ugh.
They didn't. And they were aware of nothing was going on. You're right, they had no knowledge of anything,
Yep.
and it still goes to a jury, and that jury could still find it.
Oh,
You're
yeah.
right. It's up to people.
Right.
Right? It's up to people. And they could decide, you know what? It's even though the law may not says it's their fault, we're still the jury.
Yeah.
And we're still going to find this way. Maybe.
So
right?
what's interesting about this is we were talking about it on the way up here. The elevator up here is, I'm a personal injury plaintiff's attorney.
Mhm.
And so, how we are able to get people compensated are through insurance companies. That's the only ones who are paying money, right? It's the insurance company. In California, you don't sue an insurance company, you sue the individual, and then they are defended and indemnified by the insurance company.
Mhm.
But I want to say that I am San Diego's biggest insurance salesman because I'm always talking to people when they come in. Let me see your policy. What do you have it? And I think a good attorney is going to ask you for your policy. They're going to go over this is what it means for the home. This is what it means for the auto. This is what it means. All of this, so that the client or the potential client kind of knows what's going on. Because this is the big thing: is that in life you never know what's going to happen, but you can protect yourself.
Absolutely. There's always steps you could do to do it. Unfortunately, I find, in my profession, that falls on deaf ears
Yeah.
because it isn't until something bad has happened to someone or
Right.
something's bad happened to someone that they know
Right.
that then they say, okay, maybe I do need this.
Well, so then that gives me, I think that goes into a great segue. Let's start out with auto insurance,
Mhm.
right? So with auto insurance, what is your sort of typical sort of, hey, this is the perfect auto insurance?
So when I look at auto insurance as an agent, with all due respect to my clients, I really don't care about their car.
Yeah.
Like what kind of car they have.
The car's secondary.
Okay.
I mean, losing your car, having your car damaged is an inconvenience, right? Yeah, it's a bummer. Yeah, I got to maybe take care of this, take it to the shop to get fixed. Oh, I might lose a couple $1,000s, right? That's not why people should have auto insurance. People should have auto insurance because if they cause damage to someone else's property, to someone else's person, that is where, instead of going from having a bad day to a bad week, you now have a bad year or a bad couple years or a bad life because you could lose potentially everything.
Yeah.
I
This is
have another story of something that happened that Again, auto accident wasn't
Yeah.
this individual's fault. They had lent their car out to an adult
Oh.
child of theirs. The adult
Oh.
child hit an elderly woman crossing a
Oh,
crosswalk,
goodness.
Balboa and Genesee.
Mm-hmm.
Wow.
That's a big
And,
story.
there was, the fallout at the end of the story is the insured lost her home.
Yeah.
You're kidding.
Now,
So the mom essentially who let her child borrow the car, she lost her house.
yep, she became my insured after the fact.
Mm.
Okay, so
Oh.
prior to me insuring this individual, she had very, very low limits. And then what happens? So what happens if you get in a car accident and you cause damage to someone, and let's not say you kill them, but let's say you cause damage to someone, and they say, "Hey, I'm going to hire a personal injury attorney to represent me, and I'm going to sue you."
Mhm.
Now, in the state of California, you have what they call minimum limits. Right now, it used to be 1530, which meaning 15,000 is the max they'll pay for one person, 30,000 for the entire accident. Okay, now it's 3060. In this case, I believe her limits were 100, 300, which are still low. We recommend at minimum 250, 500, meaning 250,000
Yeah.
of liability per person, $500,000 for the entire accident, and you may go above that. But nonetheless, what would happen is, let's say we're driving, I hit you, and I have state minimum of
Okay.
3060.
Okay.
You have some serious damage to you, right?
Mhm.
And you say, you know what? I have $100,000 in all these expenses that go above and beyond my medical bills, what my medical insurance will pay for,
Yep.
everything else. So I'm going to sue you for $100,000. What's going to happen is my insurance company will say, "Oh, well, Mr. Colston, well, your policy has limits of 3060. Great. It's one person. We're going to write out a policy. Here's a check for $30,000.
Mm.
We're going to send you a letter saying, hey, we've fulfilled our obligations of our contract. We
Yeah.
have a legal contract.
Right.
We have fulfilled our legal obligation to the contract.
Right.
We've paid you $30,000. Good luck. Well, who's going to pay for my attorney? I got to go to court. Who's
Yeah.
going to pay for my
Right.
attorney?
Yeah.
Well, I don't have that much money. I can't afford a $600 an hour attorney. I could afford $150.
Yeah.
Well, I mean, you tell me, if you're only paying $150 an hour for that attorney, and you've got a good personal injury lawyer who's worth a heck more than that, who's going to win in that court battle?
Yeah.
Right.
And so, I mean, it's about it's
Wow.
about protecting yourself
Oh, yeah, absolutely.
and all of that. So then, let's look at just like some basics. Here's one of the basics. Like you think of insurance, says, "Oh, insurance, I got insurance." Everybody has insurance. They've heard insurance. They know what it is. But what is it? It's really little more than a contract between a company and an individual or an entity or individuals that basically says, "Hey, you individual, if you cause harm under this scenario within our contract, we'll defend you, which means we'll hire attorneys. We'll indemnify you, which means we'll pay up to a certain limit. But it's got to fit within all of this sort of criteria."
Right.
And so that's kind of your basic of what the insurance contract
Right.
is.
If I can take a step back here just for
Yeah.
a second, you
Yes.
mentioned you have full coverage before. Hey, I bought
Yes.
this car,
Right, yeah,
full
yeah,
coverage.
This is
So you have a lender who's financing the purchase of that car. They don't care about your liability limits. The only thing
Yeah.
that lender is caring about is the fact that if that car gets damaged, they get the money back on their investment.
because
Right.
it's theirs.
It's theirs, right?
Right.
That's all they care about. They could give a hoot about anything else. So when people say full coverage,
Right.
there's
Oh.
this misnomer of what full coverage is.
Right.
Full coverage only means comp and collision.
Yeah.
Okay. That's all it means. There's lots of other coverages with auto insurance, but they only care about comp and collision because they want their money back.
They want their money.
Right.
They are protecting themselves.
Yes.
And so you as the consumer should also protect yourself.
Well, who
Yes.
came up with that full coverage?
Well, 'cause it sounds awesome.
I know,
It's-
but it's not. So
No,
who's
it's
the one who
terrible.
created that?
Who knows? It's
That's
just
so interesting, right?
It's just this term. It's in the vernacular of
Yeah.
of what's out there, and people say it, and they say it with such authority
Yeah.
Right.
that
Well, I've got full
I have full coverage,
all the
Right.
time.
and I go, okay, well, do you know what that means?
Yeah.
Mhm.
I have everything covered
You have full coverage for somebody else's property,
for someone else's property.
not to protect yourself.
Yeah. Side note: when I started dating, I was talking about moving out to La Mesa when I started dating my wife before we got married, being an insurance agent. before I drove her car, I was like, I want to see your policy.
Oh, this is so sexy. Yeah, she was like,
she goes,
oh, wow,
she
this
goes,
guy's a
what are you
real
talking
nerd."
about? Because we were gonna go drive to what's the amusement park up there? Universal Studios.
Yeah. Oh yeah.
And,
Yeah.
and I'm like,
It's a long drive.
it's a long drive. And
Busy roads.
I'm going to drive. We were going to take her van at the time because hers had one of those DVDs you could watch and the kids could watch
Yeah.
it.
Yeah.
And I said, let me just see your policy because there's a couple things I'm looking for.
Yeah.
I want to make sure that you have permissive use on your vehicle.
What does that mean?
Permissive use means that if I give my car to you to use, you are going to be covered as if you were me. Now, there's a couple caveats in that. One is you cannot be a relative that lives in my house. Okay, so if I have a relative of mine that living in my house, they can't be under that definition because they are assumed to have use of my car, right? They could grab the keys and go use it. Okay. Now, if it was a roommate situation, that's different. Also, if they're using the car for more than 30 days, that doesn't count. We have in-laws that come in from Spain. They may be here for 45 days. That doesn't count as permissive use anymore because they're here for more than 30 days.
More than 30 days, you actually have to put them on your
Yes.
policy.
Yeah.
You call.
You'd have to
You
call
call yourself.
I'd have to call myself, and I would have to add them onto my policy. Now, me being who I am, being cautious, I don't do that. I would rather them go rent a car. I would rather pay
Oh.
Hertz or Enterprise
Yeah.
to go get a car, and you guys go use the rental car. I don't want you driving my car
Yeah.
because
Really?
what if something happens? Now I have a claim against me.
You have a claim. So if even if they're covered, you have a claim against you.
Yes. So I if my in-laws are driving my car and they cause an accident, now my father-in-law is an extremely good driver.
Yeah.
But let's say accident does happen.
Yeah.
Right. Now it's going against me, and in the state of California, you have discounts. One is a good driver discount.
Yeah.
And that is actually codified in law. Prop 103 codifies what a good driver is, and all the carriers must follow that rule back from 1988.
Yeah.
And it has a few definitions of that. And one is you can't have more than property damage of more than $1,000 or any amount of personal injury. If that happens, you are ineligible for that discount. And for me, with my carrier, I mean, I could have my rates go up 25% just losing that discount.
And that's big.
And that's big.
That's big.
Yeah.
So I'll tell you what, you guys go get a rental car. I'll pay for it.
Mm-hmm.
It's
But
cheaper.
at the end of the day, it's cheaper. Plus, I have
Okay.
use of my car.
Yeah.
I don't have
Right.
to lend it
Well,
out.
it sounds like today we're getting some secrets.
Yeah. Okay.
From
so
the
back
insurance
to your,
broker.
so then to your
It's my wife.
Your wife.
So I look at her policy, and it had permissive use, which is great. But I saw her limits at that time, which was 1530.
Oh.
So this wasn't a deal breaker, though.
No, it wasn't a
Still,
deal
like,
breaker.
she's okay. Just.
But
you know,
to educate her.
But what I said is, I before we go, you are going to call. You're going to raise your limits to 250, 500.
Yeah.
Why? It's going to cost me money.
It would.
And I said, do you see your house right here?
Yeah.
It's almost a 3,000 square foot house in La Mesa,
Yeah.
top of a hill.
Oh, wow.
Beautiful views. I mean, we could look down and we could see La Mesa, the sunset.
Awesome.
It's gorgeous.
Oh, I bet
Awesome.
it is.
See your house right there. We get into an accident. I get into an accident. You get into an accident. That house is gone.
Yeah.
Right.
It's gone.
Yeah.
Mhm.
It's not worth it. You need to do this.
Mhm.
I will, in fact, tell you what, I will pay the difference to do this because it's the right thing to do.
Right. Right.
You're just bleeding insurance, right? The
Well,
Pittsburgh Steelers fans bleed gold, right?
Yeah.
Black and gold, but you bleed insurance.
Well, we always joke about it. That's one of those things that people joke about. Yeah, we see risk everywhere.
Right.
I walk around. I see risk. I see cords right here, right? I'm
Right.
sorry, you guys, but I see cords right here. I'm like, okay, well, I could trip on this.
It's
That's right.
funny because most plaintiffs' attorneys, we consider ourselves safety officers,
Yes.
right? When it comes down to
yeah.
it, like, oh, don't do that. I mean, I always joke that our kids
Oh my
are going to be
God.
deathly afraid of parking lots as they get older because I freak out so much in parking lots. What are you doing? Hold my hand. Don't do that. Nobody can see you. You have to be careful. But because we see the other side of it, we see what can happen.
For sure.
Okay, so with the
That's
coverages, now what about this? A couple quick little things I want to
Okay.
cover, like UM, UIM,
Mhm.
and then MedPay.
Okay.
Right. So let's start with the big ones. Now, the UIM for me, uninsured motorist or underinsured motorist, that's huge. And so if you don't mind, I'll give a quick little description.
Sure, go ahead.
So uninsured motorist coverage means if somebody does not have insurance on the road, which I mean, the numbers are out there. You can tell us. There's a high number.
The percent.
I haven't seen it. Well, so after we haven't gotten some good numbers post-COVID, but I could tell you before COVID, if you watch 10 cars go by, 6 of them would either be uninsured or underinsured.
Yeah, that's 60. So 60% of
give you a
cars
heart
on the
attack.
road are potentially uninsured or underinsured. And so what uninsured means, the other thing is, if somebody hits you and they just don't have insurance, or maybe it's a hit and run. They hit you and they drive away. That's considered uninsured motorists. And if that happens, then it would trigger your policy, which is for the uninsured. Underinsured, UIM, means that somebody has a low policy, a 30 policy, and you have the 250 UIM.
Yep.
And so what it means is if you get hurt and it's worth $1 million, you will first get the $30,000 from the at-fault driver, the third party, and then you get the difference between the 30 and the 250 for your own UIM policy.
So
That's
wait,
right.
I have a quick question though. Can people legally drive around without insurance?
No, and you lose your driver's license.
Oh, okay, because that's what's interesting. So if you're seeing 10 cars in
They
6
do
months,
it.
people just don't have insurance. They're just like,
I would probably say of the claims that we see, I would probably say 20% of the claims that people report to us, they were involved in an accident and the other at-fault party did not have insurance. I'd say about 20%.
20%.
Wow.
I mean, that's crazy. And so what I always think about, what I tell people, because you're right, like your wife says, well, that's going to cost me money. And what I always think about is, okay, you have, you've insured you have insured other people. To get on the road, you have to buy insurance so that if you hurt somebody, they have insurance through you. So you've insured other people, right? If you're going to insure other people, you should insure yourself to the same level. Right? Because it's the other thing I see where you have maybe a high third party. So if I'm at fault level, but then you have a super low uninsured motorist coverage level.
That's how I actually got my dad to be one of my clients.
oh, is it a good
Was-
story?
was-
Just do it
was that-
automatically?
No.
It's like, I don't know, son.
No.
We're going to
No.
give you a few years.
No,
Your dad's like, no,
no,
Chad.
no.
Well, so what happened?
But exactly what you just mentioned right there is that, why are you insuring other people for more than what you insure yourself?
Why are you insuring others for more than you insure yourself?
And his carrier allowed him to have differentiating limits. Now, when we write a policy with my agency, that is a cardinal sin. Whatever the liability is, the underinsured, uninsured motorist must match. It's unequivocal. It just has
It's
to be.
wrong.
You're just
It's
not.
wrong.
We're not going to do it otherwise, right? It just is. And if someone like they're adamant about it, like, hey, we're going to do this, I have a form. They sign it, they fill it out, I put it in there. So if God forbid something happens and they turn around and then try to sue me for,
You've given notice.
you're doing something, I should have known better. I say, pull it out. I say, listen, here it is. In fact, every policy review, and I have about 3 of these clients, every time the policy renews, I have it out there. Hey, your policy's renewing. Verify your mileage. Oh, by the way, remember you said you don't want this. We're letting you know you don't have it.
Right.
The other thing that it covers that nobody knows is the uninsured or underinsured motorist coverage. It covers, so if you were in a household, right, and if you are either on a bicycle and are struck or are a pedestrian and are struck, you get coverage. That's huge. So, Kerrie, you're walking down the street and somebody hits you, uninsured motorist or underinsured motorist covered, right? So, and that's huge. And so, like, I've got one story where this was years ago. I mean, this is wild. There was a high-speed police chase that started in La Mesa, and it was like 15 minutes. So, I mean, imagine 15 minutes at high speed.
That's
I remember
a long time.
Well, I didn't believe it at first, but then I got the police report, and it was from where it started and where it ended. It was 15 minutes, and so some of me thinking like you should be able to cover a little bit more territory than that. And then why? How do you
Especially La
not get
Mesa.
stopped?
Yeah, right.
How do you get stopped? So, but it starts in La Mesa, it ends in Barrio Logan, right? And so this poor woman, I think she was, early 20s. She's just walking down the street, right?
Oh.
She's just on her normal, every day walking down the street. And I mean, as you can imagine, high-speed police chase, they probably don't have much for insurance, right?
Oh.
And in fact, it was a stolen car, so there was no insurance.
Oh.
And then the police are immune, and as well they should be. And I mean, there's some exceptions to their immunity, but they're immune from high-speed chases. But so this car ends when it somehow kind of veers out of control, goes towards her, and it hits a utility box. Like those big green
Yes,
utility
yeah.
boxes?
They paint them all pretty.
Yeah.
Uh-huh.
And she, at the time, as she is between a wall on the sidewalk and this utility box,
No.
the box and car go flying, almost sever her arm off. But luckily, the car hit the utility box, or it would either just taken her out at the knees or killed her.
Oh my goodness.
So, I mean, that's like almost lost her arm.
Wow.
And so, but she lived with her grandfather, and he had uninsured motorist coverage. So, we dug, and I said, okay, we have coverage here. And so we're able to get her covered for some of the medical bills and I mean, her claim was worth a lot more than what he had,
Mhm,
but at least he had
something.
At least he had something.
Yeah.
And so you have this coverage right there.
Yeah.
Right.
And so what I do first off is I ask for they come in, I say, hey, show me your declarations page. They say, well, but it wasn't me. I don't care. What is your declarations page? I want to see if there is UIM, and I want to take a look at your policy. And if it doesn't meet, it's kind of what it should, I'm going to tell you about it.
So wait, can I ask a quick question in
Absolutely.
that scenario? So it's a stolen car. So what happens? So now so somebody owns that car, and what about their insurance?
Generally,
What happens?
so generally insurance follows the car, regardless of who's driving. Insurance follows the car. Now, in that instance, if it's stolen,
Yep.
is there really insurance there? I mean, that's really one of those times where you really have to let the underwriters will take a look at it.
Oh,
Not the
okay.
others, I'm sorry, the claims adjusters will look at it, and they'll really have to go through claims. And
Okay.
claims will go through their own legal process.
Oh, okay.
I mean, yeah, as an agent, you would love to say, oh yeah, absolutely, but that's the one thing when it comes to claims. In that certain scenario, you really have to let claims look at it, because there's depending upon what the policy language says, there may or
Right.
may not be. Who knows? And that's the law. Something that every time that happens, if there's a claim, I never really tell people, oh, this is absolutely covered.
Mm.
Generally, this is generally this is something that would most likely be covered. We need to have claims look at it.
Right.
When in doubt, open a claim.
Yeah.
Let's have claims review it,
Right.
and let's get them on the ball. Now, sometimes claims happen, and think, God, that probably should have been covered. Maybe we'll try to push harder sometimes to say,
Mhm.
well, let's see, we have the supervisor review this, right?
Oh,
Let's have
right.
some other people take a look at it if there's some other value there, right?
Mhm.
If even if a claim is paid, if they're not paying out what we think they should pay, let's we have this reviewed again. We think it's worth a second look. But in that case, generally, it's going to go to their coverage, because they're going to say, yeah, well, the car
Okay.
was stolen, right? It
Right.
was in a criminal act, and that's what
Right,
they're going to
right.
go back to. Well,
Right.
there was a criminal act that happened.
Right.
We're not responsible for criminal acts.
And that's going to be in that contract.
Yes.
There's going to be exclusions in the
Mm.
contract for
Yeah.
criminal acts.
Yeah.
And I mean, I suppose, the plaintiff's brain of mine will think, well, was this, what did they know or should have known? Now, I mean, most likely, no. But was this the fifth time your car was stolen because you always leave it unlocked with the keys in it? Is it in a certain area or something like that? But typically, from what I've seen is, you get a stolen car, one is it probably didn't have insurance to begin with. I mean, especially if, 20% of the claims you see are uninsured motorists. And then, by the way, if you're driving and you don't have insurance and you get into an accident, that's what they refer to as Prop 213. So what it means is that if you don't have the insurance, one is that you're likely going to lose your driver's license. And then
How
two,
long?
for, I don't even know what it is, maybe a year.
I would have to look at that. I don't know.
Yeah, it's
Thank God for Google.
yeah,
Right,
it's
okay.
you lose it. It's not like, oh, here,
Significant amount of
it's
time.
a significant amount of time.
Mhm.
And then good luck getting insured again, right?
Oh.
Because you lost your license.
You bring up something, and this is going to take a real big kind of a sidestep here, but based on where we live, Mexico is 30 miles down south.
Yeah,
Yeah.
So for anyone who does drive to Mexico, a lot of people will talk about full coverage again.
yeah.
they make the faulty assumption that if they drive in Mexico, that they have coverage. That is absolutely not true.
You and I have had this conversation.
Yes, we have.
This conversation.
Yes, we have. So your car could
You
have
scared me a
coverage.
couple years ago. So
Yeah, your car could have coverage, but to have liability coverage in Mexico, you must have Mexican insurance.
let's
don't know
back up
what
a little
that
bit.
means.
Liability insurance. What is liability insurance.
Liability means we're driving, and I'm behind you. You stop at the red light. I'm not paying attention. I'm screwing around with my cell phone. I rear end you. I cause damage to you.
You're liable.
I'm liable. So I am now liable for the injuries that I have caused you.
and for that, you have liability insurance.
It's my fault. Now, whether I was negligent or whether it was just oops, or my brake didn't really work the way it should have, right? That doesn't matter. The end result is you got hurt due to my actions.
Yeah.
Right? So I am liable for the damage that I've caused you. And that's what liability is.
And that's your third party liability, meaning that you're so somebody a client comes in to the office and they say, "Oh, I got rear-ended." And so what we would say is that the insurance carrier responsible for paying is whoever's doing the rear ending. That is the third party liability, because it's the third party. The UIM, your own insurance is a first party, because it's the direct connection.
So like talk about Mexico, if you don't have liability insurance and you cause an accident in Mexico and you're the liable party, that's a felony.
Yeah.
It's a felony?
It's a felony. It's not a misdemeanor. It's a felony under Mexico legal code, which means they could take you to jail.
Which doesn't sound like it would make for a happy Friday.
Now, I mean, we could
sound
make
like
all the
fun.
jokes about bribing people and everything else, but the reality is that is a felony,
Wow.
and you just don't do it. So that's why if someone's going to Mexico, you're driving to Mexico, you best have Mexican liability insurance at the very least.
Yeah. So in looking at that, kind of going to the next sort of phase, med pay or medical payments.
Yeah.
Tell us what that means.
We're driving in my car gets to an accident, whether necessarily there's an accident that happens. If you're a passenger in my car, you could go get medical treatment and the insurance company is going to reimburse you.
And that's up to a certain limit, right?
It could be anywhere between $1,000 to $5,000. It's not a rateable claim.
And by that, what do you mean rateable?
Which means that it's not going to affect your rates. Should the carrier pay it out, it does not affect rates.
Well, what about for UIM? Is that a rateable claim?
That's generally not going to be a rateable claim either, because you're claiming that because you are not at fault.
Yeah, I mean that's it. So I guess that's a big clarity with UIM. With uninsured or underinsured motorists, what you're saying is you're not at fault.
No.
And that's why it's the first party claim. You're saying I'm doing this solely to protect myself.
Yeah.
Because there's so much bad stuff out there in the world.
So if you take an insurance policy and you look at all the different coverages one could have, you're going to find more coverages on the policy are not rateable versus rateable. The only thing that's rateable is if you cause an accident.
If it's your fault.
It's your fault. If it's your fault, your rates are going to go up depending upon what it is. And this goes back to Prop 103, and generally most people losing their discounts. Now it could still go up based on other factors, but losing that good driver discount is when people see the rates go up a lot after an accident. That's generally why. But for a collision, there's again going back to comp and collision on the policy about full coverage. Comprehensive coverage is anything other than you running into something. So the car gets stolen, the car catches on fire, an angry girlfriend keys your car, the shopping cart hits the car,
an airplane.
An airplane like a couple of weeks ago or a month ago.
Santa, and you have full coverage and your car burns up.
That would be covered under comprehensive.
Then you're fully covered.
Fully covered.
The car is fully covered.
The insurance company is going to replace it. Okay. I was driving to my Ramona office several months ago. There was a work truck in front of me. I don't know if it hit something or something fell off of it, but I'm driving down the 67 and I see something bouncing on the road in front of me.
Well, that's scary.
Scary.
I can't turn. I
Yeah.
gotta hit it.
On the 67, no, you.
No, I mean, it's gonna hit me. It hits me. It rips off my front bumper cover. I didn't think it did much damage to the car, except the bumper cover's gone, and ended up being an $8,000 claim.
Whoa.
Oh, you're kidding. What was it?
I don't know,
You still don't know?
I still don't know.
Oh, my goodness.
but yeah, it ended up being an $8,000 claim. It's non-rateable because it's not my fault
Yeah.
Right.
that something hit me. Now, if I struck something, if I hit something that was stationary,
Yeah.
that's a different story.
You hit a power pole.
A power pole. I was going through Taco Bell and hit one of the, they might have the wall right there. I've seen that so many times. People have hit the wall as they make the turns, and you're sorry, you're liable for that. But
You're going to wash your car and you have to make that stupid tight turn. And
like the Soapy Joe.
scrape. So
Oh, yeah.
you're liable for that.
So this is kind of interesting, right? Because you're talking about, is it your fault? You have all this insurance out there for protection.
Yeah.
Protection of the property, protection of other people's property, protection for other people, protection for yourself. And the rateability, meaning your financial consequence for your insurance rates, come down to rateable or not rateable. And rateable means it was your fault.
Yes.
So you got to pay for it.
And you have to be 51% at fault.
Oh, yeah.
All right.
Well, I mean, so can I say that, hey, no, that wall was 51% at fault. I'm only like 49%.
They can argue it, but generally your rates, if it's below 50%, 50 or 50% below, generally you're not going to see your rates go higher. But yeah, if you are majority at fault.
So let's say this one, from your perspective, it's a 3-car pile up on the freeway, right? On the 8 West, you're going to work. The first car, the first car in the back rear ends the second car, which then rear ends the one in the front.
We see this one a lot.
Oh yeah, I bet you do.
This is not uncommon.
That person who got hit first, it wasn't their fault for getting hit, but is it their fault at all for hitting the car in front?
So again, I defer to claims.
Yeah.
Right? This is I defer to claims.
Oh,
I defer to claims. Defer to claims.
take a position.
But generally, this is what you generally see. If they determine the car in the middle, right? The sandwich car.
yeah.
If the sandwich car was trailing the front car at an adequate distance, at an adequate speed, they're generally going to say, yeah, it's not their fault. But if they say, you know what, we've determined that you were basically tailgating the person in front of you.
You're too close.
You were too close. We are now going to assign some fault to you. Now, how much, that's going to be determined.
Right.
But
So that's the importance of the 50%. If you're only 50% at fault, then it's
again, it depends on the carrier, right?
Yeah.
This is all. Now we're talking about some carrier specific. So each carrier is going to be a little bit different on that. Some will say, hey, we don't care. But I'm just saying in aggregate, in the big term, you really got to be, 51. It's like being a majority stakeholder.
You got to be one of
essence. Yeah.
Okay. All right. That's why, one of my first questions are for if something like that are like, okay, could you see I remember this from, I don't remember his name, the guy who taught me to drive when I was 14 and a half in Helena, Montana. And he would always,
Wait, why did you learn at 14 and a half?
because that's the way we roll up there.
Because that's the age, right?
South Dakota too.
Yeah.
The
yeah.
legal age. That's so
Well,
funny.
on the farms, it's like 10 or 12.
Yeah.
So, I was like, 70 pounds and like 3'4" when I was that age. So it's like, it would have been some thick phone books and some bricks tied to my feet. But like, I didn't grow up on the farm, but still, I was 15 when I got my license. But I still remember from there, you want to be safe, make sure you can see the rear tires of the car in front of you. And because it gives you enough kind of space in between there. So that's
Do you
one
agree with that, Chad?
100%.
Okay.
That's in fact what I taught my kids how to drive. That's exactly, and even as I drive today.
Oh.
And if I don't see the other car's tires, I feel I'm too close. And I remember that.
Yeah.
I remember my dad just instilling that in me. Right now,
Okay.
the problem is I learned how to drive on a VW bus.
Yeah.
Oh, wow.
So
So you can't. You're so far behind everybody.
It doesn't-
that you.
No, but but there's nothing in the front.
There's
right?
nothing
You're
in the
like
front.
right there.
Oh,
bang.
that's
that's in the front.
Nothing in the front.
Right. So
Yeah.
that, I mean, kind of threw that out the window. But the fear, right? So the fear of
The
not having an
sentiment is
engine
there.
in front of you, realizing that if we hit something,
Right.
I mean,
Neat.
I've got it's right there.
Yeah.
I really stayed back.
Yeah, I bet.
Plus, the car didn't go very fast anyway.
Yeah.
Right.
It had like 85 horsepower.
They're
Yeah,
not
it was
for
not-
speed.
Okay, so how about this? Whether it's your fault, whether it's not your fault, whether you don't know, you have a car crash.
Yeah.
And what are the first couple things that you as one of the participants in this, again, whether it was your fault or not, what should you do with respect to your insurance company?
Well, first thing is never admit fault.
Okay.
Even
Hey,
if it,
you heard it. You heard it. I've been saying that the whole time, but this
Never.
is straight from
never, ever,
Oh,
ever admit
beautiful.
fault.
Wow.
First thing,
Yeah.
do not do it.
Yeah.
Don't say, "Oh my gosh, I wasn't looking."
Well, so let's look at what are words of fault. I didn't see you.
Anything. Don't say anything. You would just say, "Oh, we got an accident. Here's my insurance. Here's my ID. Where's your insurance?
Are you okay?
Where's your
can
ID?
you ask if they're
Yeah,
okay?
are you okay?
Okay.
That's fine. Are you okay? That should be it.
Or oh my goodness, I'm so sorry.
No,
That's what I get a
No,
lot.
I wouldn't even say that.
No.
I wouldn't even say that.
No,
Because
because it's a sign of fault, and I'm
Yes.
with you. Part of it has to do with this: is you take out the idea of that. Hey, we have to put this wall up of protection, but you just think it's a traumatic event.
Mhm.
Your everything is just rushing. There's this wildness going on, and you're just thinking, oh no, is everything okay? Oh, I'm so sorry. I'm sorry, and you may not even mean it.
yeah. So if you get into an accident, it's your emotion's going to be high. Don't admit fault.
What are some of the other things you should do in real time right there?
Take a picture. Take your phone out. Don't even take a picture. Take a video.
Oh.
Oh, interesting.
Walk
Take the video.
Take a video. Walk around and take a video of your car. Take a video of their car.
The surrounding area.
Surrounding areas as much as you can.
Yeah.
What else while we're there? Kerrie just rear-ended me, right? What am I doing here?
Okay, you rear me. Again, I'm asking for your driver's license. I'm asking for your proof of insurance. I'm taking pictures and video of the scenes of my car, your car. A lot of people will want to start calling the police.
Oh
Yeah.
yeah.
The police aren't going to come out unless there's a really bad injury.
Yeah.
They're
And so that's the thing, is that this is, I mean, I know the answer. This we're playing T-ball right
Okay.
here, right? And I'm just setting this one up for you. So if the lack of calling the police doesn't mean that it's a small crash, right?
no.
Yeah.
Not
I
at
mean,
all.
it just means that
It means that no one's so injured that they need to call the ambulance and hospital and everything like that.
So you don't need a police report for all sorts of like bumps
You-
and scrapes with cars?
I mean, here's the thing. You could ask for the police to come out.
Yeah.
Will the police come out?
Oh.
even if they do, they won't do a report. I had a
don't
guy
always
that
do
got
one?
he had a very bad hit.
Mm.
Right after it was on the 8 West, it was the double. He got hit. He got thrown into somebody else. He had sufficient space in front of him. Similar story as what you've told, not with the VW. But at the scene, he told the officer, "I'm dizzy. I feel nauseated." Like those are bad things to happen after a crash. And the officer said, "Well, nobody looks as though they're dying, so we don't need an ambulance, and I'm not going to write a report." So, but what you can do is something called the SR1.
Oh, what's an SR1?
It's just you pull it down. It's from the state, from the DMV. You pull it down, you fill it out. Usually with your attorney, it's helpful because the attorney can kind of walk you through all of this stuff, or I suspect an insurance agent or broker. And then you mail that in to the state, and that becomes your formal document.
Oh, it's like your own police report.
It's your own police report. And then I actually think it's a little bit more powerful because you're signing under penalty of perjury.
Oh.
It takes a long time to get some of these police reports, especially if
Oh.
you get injured in the county. And again, Sheriff's Department does a great job, but sometimes it's very difficult and it takes a while to get some of these reports. Now they do get them and they get them in adequate time, but yeah, they're not necessarily quick sometimes.
One other thing, witnesses, right? You need witnesses.
Witness statements if there are witnesses. I mean, if you're lucky enough to have a witness. So I had a guy, an insured of mine. He was coming down the 67. A car was coming down Poway Road, and the guy on Poway Road was trying to beat the light.
Oh.
Ooh,
He ran the red light,
Yeah.
they're going fast.
cut
too.
my insured's car in half. This happened about 2 months ago.
Oh no.
That's so scary. It's like it's my worst, it's one of the
Wow.
worst nightmares.
Cut the car in half.
And especially these new cars.
he was lucky enough to get a witness statement. One of the guys that was stopped that was going to be making a left-hand turn onto Poway Road was an investigator for the Assistant District Attorney's Office in San Diego.
Beautiful.
Oh, wow. He
Lucky.
got lucky.
So he got the witness statement
Yeah.
from this guy,
Yeah.
which I told him, dude, this is gold.
This is
It's a credible story.
This is the most credible witness you could possibly get.
I know.
And that claim went through really, really quick.
Oh, I
But
bet.
yeah, he got that witness statement. But that what we find most times, unfortunately, is most people aren't going to stop. Most people, they just keep going. So if you could get a witness statement, it's great. But there's so many. It's so unlikely to get it. Again, I'm not trying to say don't get it, but it's great. But unfortunately, most people can't spare the time, it seems like, just to stop and actually give a statement. So if you do see an accident and you can stop and you can say, hey, this is what happened, or at least give that person your information.
Yeah.
I mean, that's what you should do.
Yeah.
Because then they could call you back after the fact.
Yeah.
Now, there's a few other things that can start popping into my head right away as we're having this discussion.
Well, let's hear them.
So one of the things that people then do is they want to call the claims department.
Yeah.
Okay. And again, I'm not trying to coach people, but claims people have a job to do.
Yeah.
I mean, the insurance companies they have a legal responsibility to pay a claim, right? But they also have a responsibility not to pay claims that they shouldn't pay.
Yeah.
So, you're put on a recorded call and you are going to say things. And if you say it in a moment where your emotions are really, really high,
Where you're unprepared. Where you have not processed everything of what happened.
Right.
you are going to say things that may or may not have actually been factually true to the event. And you are on a recorded call and they're asking you these questions and you're saying that. And once that comes out of your mouth,
Can't take it back.
you
It's hard-
cannot
hard to
put
back
that
those
back.
up.
You can't put that genie back in the bottle.
No backsies. I like
Backsies.
that. This is the no backsies doctrine.
Right. So what I tell people is, hey, listen, when you have a claim, regardless if it's an auto claim or if it's a homeowner's claim, I would suggest you call me first.
Yeah.
Let's walk through this, explain to me what happened so we could get a clear picture of this.
Yeah.
So when we talk to claims, we are very sure of what happened step by step, because we don't want to be, guessing on things. We don't want to be assuming things. We want to be very factual.
It's human nature. And what I've seen in this business is we all want to please in some sense. And so if you have a question that's presented, like think about it. We've got little kids in elementary school that their teacher asks the questions. Oh, pick me, I know the answer, right? We all want to answer that question. And the insurance adjusters are trained professionals. This is what they do every day. This is what they've done every day for many years, many of them. And they're very, very good at what they do. And so they ask questions.
They have a scripted questions, right?
Yeah.
There's a script of questions,
Yeah.
and that script exists for a reason.
And it's not for our benefit.
I'll be maybe a little more generous, but
Yeah.
it's maybe for lots of different benefits, but there are questions in there that are meant to, if someone is trying to make and the reason why they're there is if someone is trying to make a fraudulent claim, they're going to try to catch you, right?
Yeah.
Right.
So the problem is that those questions do exist.
Right.
And even if you're not making a fraudulent claim, because your emotions are running high, you're not prepared, you've never filed a claim before, you don't know what the hell to say, you're trying to please people.
It's a daunting process.
You may say something that after the fact, you're like, oh, wow, I probably shouldn't have said that because it didn't come out right.
Right.
I think the other thing that happens is people don't know. Like what I've seen from a general damages standpoint, like how this is post incident, how that incident has impacted you. The absolute worst person for me to find that information is the victim, because they put blinders on. I think some of it has to do with the reptilian part of the brain, that you don't want to have this sort of bad stuff happen. It's the friends and family around you that recognize everything, right? They're the ones who see you. And so I think the same thing happens in an accident. Big, small, giant, whatever it is, It's this happens, and you don't necessarily know exactly what's going on. Because facts come from perception of what happened and your recollection of that perception of what happened. So if there's some sort of snag in the perception of what happened, then anything you think you're going to recall is incorrect.
I also would recommend people, go home and write it down. Take a piece of paper and just write it down.
Yep.
That's really solid.
And then come back, set it aside, go to bed, have dinner, relax, take a hot bath, and then come back and look at it again tomorrow. And then, okay, this is what I wrote. This is replay in your head.
Yeah.
And then say, okay, now I'm ready to go forward, because now I've had a chance to let it sit, percolate, go through all the thoughts on it. And did this really happen? And write it down, because if you don't write it down, what's going to happen is that you're just going to try to go on memory.
Yeah.
And as humans, we're going to kind of forget things, and we're going to try to fill in the space. We're going to put filler in there.
Yeah.
And now the story is going to change. And then what's going to happen is that you put a recorded statement down, and then you go back and you forget things and you try to fill it in. And then I say, well, wait a second. Now your story's not matching.
Right.
Okay. Now we got an issue now.
So I think this kind of gets into that's some of the stuff that the adjusters are looking at.
Yeah.
Like, so what are some of the things to what you can, the best that you know, what are some of the things the adjusters are looking at post-accident, whether it's your fault or whether you're saying it's somebody else's fault?
Well, they're trying to, for our cars specifically, I mean, they're looking at, okay, well, how much of this damage was done beforehand?
Okay.
Like, okay, are you trying to get coverage for something that's more than what's there?
You were rear-ended, but you're claiming your front left light?
Right. Okay, like I just mentioned, something hit me. Okay, well, that's kind of common knowledge, not specifically, but okay, was this really something that could have been avoided, or did you really hit something? Like, what really happened here? Okay, they're saying they backed into you. Okay, did they really? Was that what really happened, or did you hit them?
Yeah.
Right.
So then, how is it that adjusters are making these calls?
They could take a look at the way the impacts were made. They could take a look at the damages. I mean, it's amazing. They could take a look at these pictures of these scenes and say, hey, listen, I could see the scratch on the car starts from here and goes there. The only way that scratch could have happened, that damage could have happened, is if these cars hit at this certain angle.
It's
right?
accident reconstruction.
It's the only way it's going to happen, right? So based on that, we are going to accept or deny claims.
Okay.
If you own a Tesla,
Oh,
you got all sorts of
that's
cameras.
right.
All sorts of cameras.
if you own a Tesla, you pay a little bit more to have your cameras turned on.
Yeah.
If you do not own a dash cam, go out and buy a dash cam. Probably one of the biggest things to save your behind in an accident is owning a dash cam.
Well,
Really?
this makes me think of, we've got one case right now going where our person actually rear-ended the car. And so when they called, and it was a friend of a friend, and they called, and I'm like, there's not much I can do about that. You rear-ended them. But they had a dash cam. And it happened to be they hit a Tesla. But it was this really funky intersection.
Mm-hmm.
And it was like LA County or something, where it's kind of like this exit, this 2-lane exit, and it merges with this other lane that's coming in. And there's this, between those 2 lanes, actually in the exit lane, there's 2 lanes. And then there's 1 lane where it's merging in. There's this solid yellow line. And then there's a golf course. Like, so if you're coming from that solid yellow line, you can't make the golf course turn.
Yeah.
And so, but with the dash cam, I looked at it, and you have this Tesla just comes flying through here, crosses the solid yellow line, crosses another dotted yellow, solid white line, crosses the dotted white line, and immediately started to turn into the golf course with no signal. There's no signal going anywhere, and our guy slammed into her. Their insurance, the Tesla's insurance, accepted liability once we showed them that video because of how far she went and she didn't turn.
Yeah.
It also didn't help her. It helped us when she gets out and she says, hey, I got a tea time. I can't wait for you to sit around here. So, but still, it's the dash cam. Without that dash cam, we would have had nothing. You
can buy a dash cam, $100, $150 maybe. But yeah, it's I do got to probably go in like half an hour.
Okay.
Just FYI.
Yeah.
But that's actually I bought that for Christmas. I want to buy that.
For your wife?
Well, I should have. That's what my gift. I didn't because there's some other things that I did.
Oh.
But
Well,
now it sounds
ruined
bad.
it.
But
She doesn't
I
drive
should
a
have.
car yet because she didn't up her
Well,
insurance.
she does. She does now. She does now. People complain about premiums.
Yeah.
Oh,
I mean, I get it. Cars are expensive.
Pay a little now or pay a lot later.
I pay like we have 4 cars. I mean, I pay probably almost $900 a month in auto insurance, right? And I feel the pain. So when I hear clients tell me, I'm like, yeah, I feel it. I am a consumer too, and I feel it. And unfortunately, with the auto market right now, there's really not that could be done. There's some carriers out there that almost wouldn't want business, but they have to take it. Prop 103 requires insurance carriers, if they're a good driver, to accept drivers.
Oh, interesting.
Oh, really?
Yeah, I mean, that's part of the law. If you are a good driver in the state of California, Prop 103 mandates carriers to accept you.
Oh.
They have to take you. They can't say we don't want your business, right? Now, if you're not a good driver, they could deny it.
Oh, okay.
But if you're a good driver, they have to. But you're going to probably see in the future, just in general. I know there's a big push for charging per mile for taxes for gas as well. Electric cars, there's this declining revenue for a fuel tax, but also behind that, a lot of carriers are going to do like what they call telematics, where you're putting something in the car and it can detect how fast you're driving, sudden brakes, how fast you're going.
That's the thing about it.
And that's and that will see how far you drive. So that could, hey, I could help taxes on this.
Yeah.
And I don't think this was in California, but I'm in some insurance groups, these private insurance groups, like on Facebook.
Yeah.
And someone made a post this morning about this. Was, hey, listen, one of our carriers in some other state, I believe, said, hey, listen, you are not a good driver.
Yeah.
Because you are not a good driver, we are going to mandate you put telematics in your car.
Oh,
and if you drive over 80 miles an hour, if you have this many, like if you drive over 80 so many times in a period of time, if you have so many hard or sudden breaks in a period of time, your rates are going to go up.
Hard
No.
or sudden breaks.
Mhm.
Oh, you talk,
And
and people are afraid of AI. That's creepy.
And people say things like, okay, prove it. There was a screenshot of the letter that went out to the client, and he goes, dudes, I'm not making this up. Here it is.
Oh, wow.
And we're like, that's probably true.
Yeah.
So again, this was not in California, because California, from a privacy standpoint, isn't too hip on the whole just go ahead and look at your car type of thing.
Like communist Russia style.
Right. I mean, but there are a lot of states that are, and
Taliban rule.
you're going to see, again, with this push with the declining revenue of gas tax.
Interesting.
Now, I don't like it necessarily because I do a lot of driving.
Yeah.
Right?
Does that mean you do a lot of speeding?
No,
you don't have to answer.
Don't do a lot of speeding. But I mean, I like, especially my office in Ramona, I drive in the East County, the backcountry a lot. So I do a lot of driving up and down the hill. Oh, real quick on that. For people who have car insurance, if you don't have glass coverage, please get it. Glass coverage is
windshield
your windshield, right? So on my car specifically, I go up and down the 67. There's a gravel yard as you get into Lakeside on the 67. A couple times I've got hit by rocks. To replace my windshield costs $2,000.
Oh,
Like
that's expensive.
I've had my car for 4 years. I've gone through 3 windshields.
no.
That's no good.
Because
Is that a rateable offense?
Nope. It's non-rateable.
Not your fault.
It's not rateable. It's not my fault. That's
Beautiful.
right.
Yeah.
It's not rateable, but I've had 3 windshields. So think about that. That's $6,000 of windshields I've gone through in a 4-year period of time.
A lot of money.
Because it's non-rateable, the carrier can't drop me. They can't really change my rate.
Secret, the insurance industry secrets, right? here.
It's not my fault that, I mean, I have this crack that just, it's a foot long.
Yeah.
And
Which is a violation of the vehicle.
right now, it's a violation of the vehicle code. I have to get this fixed. And I have to get special glass because I have one of those heads-up displays in my car.
Oh, yeah.
So I also have OEM coverage.
Yeah.
So OEM stands for original manufactured parts.
Oh,
So they don't give you third-party parts.
Oh, yes.
So when I get my glass, it's OEM glass, so the heads-up display doesn't look funky.
Interesting.
And how much does glass coverage cost? It's nominal. We're talking about maybe like a Happy Meal, right?
Yeah.
How much does OEM cost? I mean, we're talking
Couple Starbucks.
$15, maybe $50 over a 6-month period of time. Like it's cheap.
Cheap compared to the 6,000.
Yeah.
Well, this is interesting. Well, so while we still got you here,
Yeah.
I want to kind of transition into kind of fire coverage because
Okay.
it's kind of a big deal here.
Huge coverage.
Can you give us kind of the main kind of overview of what we need to know, what we should know, what we don't know, where we're at?
Well, I think what's interesting is like there was a time when it didn't really apply to some folks, where now it feels like fire coverage in California. We all need to care about it.
Hey, San Diego has a bunch of canyons
So
in the middle of town.
So I have one of my houses is in Claremont, and it's in a fire zone because it's near a canyon in
Right.
Claremont.
I understand that one.
We are going to see more and more carriers probably leave California and stop writing business in California. You're going to see
For homeowners?
for
or-
homeowners.
Okay.
You're still seeing that. You're going to see more non-admitted carriers coming in. That's maybe a bigger discussion.
Now, non-admitted.
Non-admitted
what is that?
carriers mean these are carriers that are not necessarily part of the guarantee association. So you have admitted carriers and non-admitted
Like
carriers.
good and then not so good.
No, it's not. It's not good or bad. It's just what they call the admitted market and the surplus lines market. Surplus lines market historically would have insured harder to place risk or larger risk.
Oh,
Does it just cost more?
It generally costs a little bit more, but they're able to underwrite things that admitted carriers generally can't.
So they just kind of shut their eyes and sign off on it?
No, they're actually a little bit more restrictive.
Oh.
So they will not take as much risk. They could change their underwriting guidelines a little bit more abruptly.
Mm-hmm.
They're not bad at all. I mean,
Yeah.
surplus lines carriers, and that's one of the things is a lot of people think, well, that doesn't sound good. Surplus lines carriers could be very good carriers,
Yeah.
excellent carriers. But we are seeing more of that, and they estimate actually maybe up to 40 to 50% of the home market in California might be surplus lines carriers next few years.
Well, I was reading something that San Diego County in like a super high fire area, they're looking at putting 2,000 new houses, something like that.
So unfortunately, a lot of things we see in San Diego has to go to the California Fair Plan.
Yeah.
Which
Which I've heard referred to as the California Unfair Plan.
It's unfair plan. We
really?
we
So
hear
what
that all the
is it?
time. California Fair Plan was made in 1968.
Okay.
It stands for the California. It stands for the Fair Access to Insurance Resources. That's the acronym.
Okay.
Fair, fair
Access
access
to
to insurance resources, and it was originally made for homes that had bad roofs.
Oh,
So it was kind of like kind of like a timeout box. Like, hey, 1968, you have a really bad roof. We're not going to insure you. You get to go there for 1 year,
Yeah.
fix your roof,
Yeah.
and come back.
Yep.
And you can only stay on it for 1 year. So you got 1 year's worth of coverage to fix your roof and then come back. It was made in 1968. So the coverages in 1968 were very limited.
Yeah.
Fire, smoke, internal explosion, vandalism, riot, mischief, a motorized object hitting the house. It's what they call a DP1 policy. Okay. The California Fair Plan was built on DP1 chassis.
Oh,
Okay.
okay. Yep.
It has not evolved.
Oh.
To this day, the California Fair Plan is still a DP1 policy.
Yeah.
Now, there's been some changes when the wildfires started happening about 20 years ago about them allowing people to stay on the California Fair Plan for longer than 1 year, still like to get off. We're now seeing this kind of bizarre world where the California Fair Plan, in many instances now, with its accompanying difference of condition policy, is actually less expensive than an admitted carrier.
Okay.
So I've had instances where people are getting non-renewed by their carrier.
Yeah.
And I'm like, well, I got good news and bad news for you.
Mm.
The bad news is you're getting dropped,
Yeah.
Wah, wah.
But you know what? It's in, 90 days from now.
Yeah.
Don't panic. This is not a bad thing. Go out and have dinner this weekend. We'll talk about it next week, but I can assure you have nothing to worry about because we have an option for you. It's guaranteed. You're still going to have most of the coverages you're going to have now. I mean, if you compare it side by side, we could make it almost identical to what you have
Mm-hmm.
by using a fair plan and difference of conditions policy. And you're going to be saving maybe 25% or 30% of what your renewal would have
That's
been if
big.
you got approved, probably.
Wow.
So that's kind of wild. What are some of the things if you're in a fire danger area?
Mhm.
What type of policies should you have?
So if you are in an area where they require the California Fair Plan, so let's go back to we talk about the cars.
Yeah.
You're the people who loan you the money for the cars. They only care about replacing the car. Your lender, then you're required to have insurance by your lender
Yeah.
because that lender is selling the note on the market And part of their investment package requires you to have insurance. Your lender only cares about smoke and fire and wind.
You're talking about the car or the
I'm talking about the home. I'm sorry.
home.
I'm sorry. Talk about the home. They only care about the house burning down, and they care about wind and maybe a little bit of smoke. That's it. They don't care about anything else.
What's the wind?
Like say if wind comes through, it could blow down part of the roof or something,
all right.
right? It
Gotcha.
knocks over a tree and the tree hits the
like
house.
the pictures from Florida or the
Yeah.
South when hurricanes come in. And
Right.
roof
So if you have to get the California Fair Plan, you should have, and again, my agency, we require you to have both. If you don't have both, we make you sign a disclosure because it's a problem. So what there is something called a difference of condition policy. You put this policy, this difference of condition policy, together with the California Fair Plan. And when you combine the two, you now have traditional homeowners insurance.
Okay.
So it covers all the normal perils that you would find with a homeowner's policy. Is what the homeowner's policy is in what they call either an HO3 or HO5 contract. So when you put a difference of condition policy, which is generally an HO3 contract that has an endorsement on it, and that first endorsement is called a difference of conditions endorsement. And what it says is that we will insure everything we would normally insure with this homeowner's policy,
Yeah.
except we will exclude the perils covered in the FAIR Plan.
Okay.
So actually,
So it's like a combination and it
Yeah.
covers it all.
So you put it together like Legos, like you're putting a puzzle together, and it syncs up almost perfectly
Yeah.
of what it should look like. And again, just where this kind of bizarro world where now you have some carriers, even if they do renew you, I had one person out in Boulevard. They got renewed by their carrier, and they went from paying like $1,000, maybe $1,500 a year. Their renewal was $15,000.
Oh, that's a lot. That's
Wow.
What in the hell is going to burn in Boulevard?
Yeah.
It's sand and tumbleweeds.
Yeah. Yeah.
She was crying. She was devastated. She was retired. There was no way for her to pay. Now, at that point, you can't just cancel that policy and go to the FAIR Plan. You can't do that.
Yeah.
Oh.
In fact, as an agent, we have to sign something that says that's what we're not doing. Right. So I said, hey, this is the situation. You can let your policy lapse for a month and then reply to the FAIR Plan.
Yeah.
But I'm just telling you, this is how the steps work.
Yeah.
I'm not telling you that's what you should do. I'm telling you could take your renewal,
Yeah.
or you could do, or she goes, well, I just can't pay it. Okay, if you can't pay it, why don't I call you back in 31 days and then we could do this?
Right.
Okay.
I can't. Again, I can't.
You're working with the people to try and take
Right.
an extra
Find a
step.
solution.
to find a solution.
I could explain the rules of the game to you. I can't tell you how to play the game, but I can
Right.
explain the rules of the game, and that's what she did. And she got the FAIR Plan. Did the rate go up? Yeah, but the
Not
rate
15,000.
No, the rate with the FAIR Plan and difference condition ended up being like $3,800.
So then here's one on the kind of the ending slope of this.
Yeah.
What I'm curious about. So some of these things we get, right? When you're out you're out in the mountains, you're out in apparently the desert, where you know that there's going to be fire, there's going to be potential fire risk.
Yeah.
Well, what about like what happened in Los Angeles, the Los Angeles fires? These are not, I mean, maybe yes, there was some, I mean, you're in California, so it's going to burn. But so regular homeowners, what should they have when they go to their insurance agent, when they call their insurance company? What are the 3 to 5 things that they need to tell the insurance company? This is where I live, and this is what I need to protect them if there's a fire.
Well, the insurance once we find the address, first thing I look at is Google Maps,
Yeah.
and I just want to see how much open space is there.
Oh.
Because there's even carriers out there that say, hey, we'll underwrite the area, but if you're in so many feet of open area, we're not going to insure you.
Oh.
There's really not much homeowners can do. And unfortunately, that's the reality, is that everything is already decided by the insurance carriers whether they're going to insure an address or not. There's really nothing anyone could do.
If they get accepted,
Mhm.
what is there particular lines of insurance? Is there particular coverages that they should get if
you
you're
get-
concerned about the fire?
Yeah. So they want to make sure that every policy that's written comes with a replacement cost estimate.
Yeah.
Go through that. Ask
Meaning of the home.
of the home. Ask your agent, ask the carrier for a copy of that reconstruction estimate. You'll get it, but it's going to be buried in things.
Yeah.
You're going to want to get it to make sure you're actually properly insured. One of the things we saw in LA is that many houses were not insured enough to be built.
Replaced.
They
I
should
would
have.
say that's endemic throughout.
Yeah. And
Right.
there's a couple lawsuits going on about it right now. And I mentioned to you before that I insured a house up in the Pasadena area 3 days before the fires came through. It ended up being $1 million loss. So one of the things we've always done is we've tried to overestimate a little bit.
Correct.
If the house could be average, we'll say, well, maybe it's above average.
And this is talking about like the cost of rebuild.
Yeah, we're talking about coverage A. So in a homeowner's policy, you have coverage A, which is the reconstruction cost. You have coverage B, which is separate structures, and you have your personal property, loss of use. And it's really making sure that coverage A is, if anyone's below $300 a square foot in San Diego County, you got to get above 300 square foot.
And that's what I was going to comment. I think that if anybody's listening, if anybody's watching, if they go look at that coverage A, they go look at what it is, they're probably going to be shocked at how little insurance they have for the replacement. They might be able to replace, like put a little shed, maybe put a toilet in it, but that's about it.
Yeah. So that has to be higher. Ask for a reconstruction cost estimate to be rerun. Also, most policies allow for what they call extended dwelling replacement.
Yeah.
And that's an endorsement that will give you up to maybe 25 to 50% of coverage A. It does add a little bit of money to the policy, but what it does is, let's say you get an extended replacement endorsement at 50%. So let's say your coverage A is $1 million, just for easy math, San Diego State math, right? $1 million. What happens is that if my house is insured to value, which if it should be, the insurance company will say, hey, listen, Chad, your house burned down. Here's $1 million.
Yeah.
Oh, you're having cost overruns now. You have this endorsement of 50%. So we'll give you an additional $500,000 above and beyond what your coverage A is.
That's an impressive.
So instead of $1 million, now I'm at 1.5.
Yeah.
Mm-hmm.
That really helps. So
and this is covering just the loss of the home.
Just the loss of the home.
Now, you're not. Are you talking about your goods that were in there? Your
nope, not talking about personal property. Yeah, just the house being rebuilt.
Yeah.
Right now, if personal property, people ask me questions like, how should I document things? Again, let's go back to your cell phone. Every year, walk around with your cell phone. Just don't take pictures. Just record things.
Well, I think most of the population is recording and taking pictures of everything anyways.
Mm-hmm.
That leads to this interesting point on that. So in personal property, there's a couple things that have sublimits.
Mm-hmm.
Jewelry, jewelry, musical instruments, firearms, fine arts, rugs, furs, baseball cards, other types of collectibles.
Just ask your brother. They'll tell you.
A lot of times those are only going to be insured up to $2,500 per item. So let's say someone has a $15,000 engagement ring.
Yeah.
Gets stolen or something happens to it. And you think, oh, I have $500,000 personal property coverage. I'm okay.
Yeah.
You go to the carrier goes, oh, that's horrible. You're right. This is a covered loss.
Yeah.
Here's your check for $2,500. You go, wait a second.
That's
I just had this ring appraised. It was $15,000.
Yeah.
Mm-hmm.
Why are you giving me $2,500? Well, because personal property, certain select items in personal property, and this is true for all carriers in California,
Wow.
have sublimits. So if you have those particular items, those are things you need to bring up to your agent and say, hey, listen, we have these items.
Yeah.
I want to make sure they're properly covered. And there's a couple different ways you could do it. You could endorse it a certain ways. You could if it's jewelry, I personally do a separate standalone policy.
But this is all initiated in talking with your insurance company or with your broker.
Yes.
So then to kind of finish it out, let's look at what are you as the broker.
Yeah.
What would you say that are the top one or two things that a consumer should be doing with respect to their home and their auto policy every year?
Liability.
Liability.
Make sure your auto limit liabilities are as high as they go. Make sure your homeowner's liability limits are as high as they go. Again, you hired Joe Blow plumber to come work on your house.
Mm-hmm.
Okay. You realize if they get hurt while working on your house, you could be sued under workers' comp.
Yeah.
That workers' comp is going to be under your liability of your homeowners. Then, and something we brought up is you probably should have excess liability coverage, which is an umbrella policy, which extends liability to another $1 million to $5 million above and beyond your underlying limits.
Yeah.
So liability. Your car, hey, it's great if you have comp collision, but you should have it, but You definitely should have, matching limits.
It's talking about protecting yourself.
Protect yourself.
Right.
And on your home, make sure that your 360 value is correct.
Yeah.
Because they can print it out to you. And it's about a 5-page document.
Yeah.
Make sure it's correct. Make sure you have the extended replacement on there. Look through all the options. Some carriers offer some options, for example, slab access. If you have a slab leak, some will cover actually slab access, some won't. Water backup. If you want water backup, ask what that is. Maybe you want it, maybe you don't. Ask about personal liability. One thing, ask about excess liability. One thing we didn't talk about is you mentioned, and you're aware that, let's say that I don't have all the assets. You could still go after my future income in the state of California.
Yeah.
And what is it? You could go up to 25% for up to 10 years?
Yeah.
What's the rule?
For future income.
Yeah, future income. So yeah.
Well, what I'm hearing and doing this for so long, but what I'm hearing from you particularly is that it's not something where you can be passive.
No.
That to really be fully prepared or to be fully protected, it's an active role, talking with your broker, engaging with your insurance company, being aware of what's going on and making sure that you're protected.
Yeah, and not to make any assumptions, because this
No.
full coverage is not full coverage.
Full coverage.
It's the
So many people out there.
You're right. It comes back to the beginning of the story.
Yeah.
That is full coverage.
it's the easiest way, and Roy, you brought this up at the very beginning. You could work a lifetime
Yeah.
to acquire, you could blood, sweat, and tears. And maybe your goal is to, hey, I want to pass things on to my kids, right?
Yeah.
I worked really hard, bust my ass. I've went out, I've bought property. I have these assets. I want to give it to my kids. It's really important to me. I might not be spending it, but I want to give this on to my future generations, right? It's important to me.
Mm-hmm.
You could be an older person who's worked really hard. As an older person, you can get in a car accident because
Right.
you're just older now.
Yeah.
You're slower.
Yeah.
You cause something to happen,
Yeah.
and you could literally lose it all
Ugh.
in a second.
In a split second.
Mm-hmm.
Well, I tell you what,
Wow,
this
has been our longest podcast ever,
but it's
Chad.
been awesome.
Thank
it has been
you.
awesome.
Well,
I mean,
If
this
it wasn't
is-
for the fact that I just realized it's been almost 2 hours since I put
Goodness.
I had it for a lot less.
this is
But I can
good.
keep going. I feel like I'm just getting started.
Right?
I feel like we've really pulled back the curtain a little bit, and you talk about the unseen impact. I mean, this is like all of this sort of stuff. This is what's important. So thank you very much for coming.
Thank you.
So again, Chad Colston of Colston Insurance. We'll
Yay.
have a little link when this goes
Thank you.
live for all of that. And for everyone else, thank you for listening and watching to this episode. Remember to rate, review, subscribe. You can watch us on Spotify now or YouTube. And you can listen to us on any of your favorite podcast platforms. I'm Rory. This is Kerrie. Chad Colston. Thanks so much. See you next time.